Let's welcome on board CA Rudra Murthy BV, MD at Vachna Investments. Rudra, hi, good afternoon, and thanks for joining us. Great to be chatting with you this afternoon. First of all, help us understand the kind of levels that you're watching on the Nifty and Nifty Bank, given that Nifty Bank is still holding on to the green, but we have slipped quite some bit from the day's highest point. Nifty has now tilted over to the red. Tell us, what are the levels that you're spotting heading into next week, especially given that this was a truncated week, but on the flip side, on the fundamentals at least, it's been a 50-50 for the Nifty earnings so far. At least on the charts, tell us what levels are you spotting for both of these?
Good afternoon and thanks for having me in the show. If you see the month of April, Nifty moved from those levels of 21,800 to current levels of 24,500, and all this happened just in 8 to 10 trading session, which has been very positive. But also one has to understand the move has been very swift, and now for last 5-6 trading session, we are consolidating at this range of 24,400 to 24,500. And morning when I saw this gap up move and also levels above 24,500 sustaining, I thought we have broken out of the consolidation, but then again we saw a dip back to those range again, and we are seeing some amount of resistance at the 24,460 to 24,500 on Nifty spot. So for me, this is a time-wise consolidation which is happening at current market price. Now the broad range is around 23,800, 23,850 on Nifty. We have a strong support, and at around 24,450, 24,500 we have resistance. Similar levels if you watch on Bank Nifty, support is emerging at around 53,800 to 54,300 range, and resistance is definitely seen at levels closer to that 56,000. So for me, market will see some amount of time-wise consolidation. The structure has clearly changed from sell on rise to buy on dip market, and right now you have to be very sector and stock specific. Wait for any dip in index to buy that dip, and I am very bullish on this market for medium to longer term, having seen this big move happening in very short term. About 2,700 point Nifty move has happened just in the 10 to 12 trading session. So now we are seeing some time wise consolidation, and use any dip in market to definitely buy.
Right, use the market to buy on the dips because the structure has changed from sell on rise to buy on dips now. Point taken. But tell us, Rudramurthy, tell us what are these sectors where you're seeing value in? Whenever there is a dip, you start buying. But what are these pockets of value? Where should one look at buying then?
See, definitely private banks still has value, and even after the move what you have seen recently on private banks, on chart definitely private banks are the best when it comes to picking the right sector. So it's a matter of choice. Looking at results, definitely ICICI Bank did very well, and one can also look at charts of ICICI Bank where strong support is at around 1,380, 1,400 level. So every dip in ICICI Bank is a good buying opportunity, and one can definitely have it in your portfolio. Also look at stocks like HDFC Bank and Kotak Bank. Last 2-3 years they have done nothing, and from now here on next 2 to 3 years you will get good returns in these private bank. So it is ICICI Bank, Kotak Bank, and you can even look at HDFC Bank from private bank. So for me, sector wise private banks will do the best. And even below that, if you see PSU Bank, specifically the charts of SBI and Bank of Baroda are very, very strong. So you have to be very stock specific when it comes to PSU Bank. And yes, my top 2 picks from PSU Bank will be SBI as well as Bank of Baroda. And if you go away from financials, definitely you have strength seen in even insurance stocks. Look at the way SBI Life did post its results. Numbers were very great. Chartically looks very, very strong. And even for that matter, HDFC Life also looks very strong. So for me, these are 2 stocks again from insurance sector which one can definitely look at buying. And for me, even select consumer discretionary stocks are doing very good. And even some of these stocks from FMCG like United Spirits, or even for that matter, if you have to pick consumer discretionary stocks, look at even stocks like Hindustan Unilever, or look at for that matter aviation stocks, specifically Indigo. So these are stocks which are very selective from the sector of FMCG in general, which you can look at buying. And even for me, stocks from selective power as a sector looks very good. Look at even stock there like Tata Power, NTPC. These are stocks which showing strength, and you have to be very sector specific and stock specific in this market.
Okay, Rudra, also share with us, thanks for first of all sharing so many large cap names with us, but from the broader end of the market, if you could share with us a couple of names, what's looking good from that end of the market?
See, for me, at current market juncture and in this market environment, it is good to stay with large cap, where relatively and in general, still large cap has better valuation, comfort and margin of safety compared to broader market, mid and small cap in general. But if you ask me to pick some stocks where there is valuation comfort, and if I have to buy it from the broader market, I have few stocks like, for example, Sangvi Mover at levels closer to that 260, 270 has a strong support. And yes, if you look at fundamentally also, valuation comfort is definitely there. Or even look at, for that matter, stocks like Tamil Nadu Mercantile Bank, TMB looks also strong. Results were very good this quarter, and at levels closer to that 435, 440, there is very strong support to TMB, and it can head towards levels closer to that 550, 600 from current market price of around 450. So risk reward is very favorable from current market price, and in broader market in general, I will still say avoid them and be in large cap unless you are very company specific and you have seen the results which are good, and where there is valuation comfort, then only be in broader market. So two stocks, stock picks, if I have to take from current market price, again I'm going for chemicals as a sector, which is also looking very strong.
Right.
Look at the chart patterns of stocks like, for example, SRF, even UPL, they're all looking very, very strong to me. In a market which is just consolidating, these stocks are doing great to me. And if I have to pick one among them, yes, I've chosen SRF. SRF at around 2,900, 3,000, very, very strong base. So at current market price, look at buying SRF. Stock is also available in futures. One can positionally take a long and then roll it over. 3,250 to 3,500 will be my initial target on SRF. Have a tight stop loss of 2,940 for this long call. Another bank which came out with good results and guidance was very, very positive was RBL Bank. You have to be very choosy when it comes to mid to small cap kind of a bank, and especially if you see results of either Bandhan Bank or Federal Bank, they were not good, but RBL Bank was an exception. So RBL Bank at current market price and on dips to 195, I will be a buyer in RBL Bank. Look at targets of 230 to come. Have a stop loss of 188 on RBL Bank. A great risk reward at current market price to be buying RBL Bank.
If you like this video, then like, share and subscribe to ET Now.